The prompt for this webinar was experts sharing some of their favorite indicators. And as mentioned in our title suggests, at Elliott Wave Trader, we focus primarily on analyzing investor sentiment displayed through price charts and looking at patterns of fear and greed. So I wanted to kind of start today with a little bit of a basic understanding of Elliott Wave, and then also on top of that, show how we look at a couple of other indicators that I personally enjoy looking at that kind of help give us confirmation or is just an added tool in conjunction with that. We're also looking at MACD and RSI and moving averages and Bollinger Bands and trend lines and all sorts of other stuff, but there's a few things that I wanted to talk about, mainly the parabolic support and resistance and iClouds and some examples of how kind of I use those in conjunction with the Elliott Wave analysis that we're doing. So very, very basic. Elliott Wave is, as we said, a way of looking at chart patterns to see fear and greed manifest in price patterns and kind of give them context and labels and be able to assess what that could mean for future potential price and not get swept up into those emotions. So Elliott Wave patterns are divided primarily first into motive waves that go in a direction of trend versus corrective waves that are counter trend. And most of the time, those are going to be expressed as either as some sort of number set of 1, 2, 3, 4, 5, and then some sort of letter set of an A, B, C, or something else similar for the corrective or counter trend. Then that skipped a little bit ahead. Okay, so the next major thing that we look at is, in addition to just the very, very basic structure, we use Fibonacci retracements and Fibonacci extensions a lot. That is probably the biggest technical analysis tool that we use in doing our analysis. Is one, we decide on some wave labels of how things seem like they fit that Elliott Wave look. And then we start measuring things. We measure the retracement to see if it fits within normal guidelines for retracement. Wave 2 often retraces 38.2%, 50%, or 61%. And those are regions, they aren't always exact numbers. And then we look for extensions that has also Fibonacci ratios to that earlier part. So this kind of graph, just very, very simplified expression of Elliott Wave, shows a couple of things here. It shows the fractal nature, where inside of a 1 and a 2, you'll have the same 5 waves up and 3 waves down. So you have a smaller 1, 2, 3, 4, 5, and an ABC. And then the biggest advancement of that, I think, that Avi Gilbert, the creator of Elliott Wave Trader, and Garrett and I run Stockwaves and the Metals Mining and Agriculture Service as part of Elliott Wave Trader. But the biggest advancement that Avi Gilbert contributed to the world of Elliott Wave was his understanding of what he calls Fibonacci pinball. And that was a very, very precise assessment of how the subwaves inside of a third and then the subsequent fourth and fifth behave. And we see this with such regularity that we really set our clocks by it and use this as the benchmark. And so when something is not displaying proper Fibonacci pinball, then we know that that's probably not a third wave, that we can automatically start to assume, well, maybe that's not a 1, 2, maybe that's an A and a B, and this is filling out a choppy or C wave that's not going to go as far, or that it's setting up for failure to not even hold as a 1, 2 or an A, B, because it's not behaving the way that we should see it behave in that first start of the move off of the low. So with such frequency, again, that we'll see the wave 1 inside of a third will hit one of 3 targets, either the 382, the 50, or the 618 in terms of that Fibonacci extension. And that is the measure of wave 1 in the extended off of wave 2. So the Fibonacci extension's there. And then after a normal pullback for the smaller wave 2, we'll get an extension to the 100% of the 1236, then normal guidelines for wave 4, and then extension up to the 1382 or the 1618. Then usually a pullback to the 100% fib for the actual fourth wave, and then extension up to the 764 or 176.4 or the 200% for that fifth wave. And we really do focus a lot on education at Elliott Wave Trader. But that wasn't the main purpose of our talk today. So I did include this QR code that goes directly to the free space on the site. We have a number of public articles and webinars and some other educational materials to learn more about Elliott Wave and how we do Fibonacci analysis. It doesn't require a credit card or login to check that out. And we do offer free trials for our services there. But I would include this as a slide so you guys can go check that out if you're interested in a little bit more education on Elliott Wave itself. So wanted to start with just kind of showing how we present our analysis. And this is going back, this was a in the Metals, Miners, and Agriculture service that Garrett, Patton, and I run. And in Stock Waves, we developed what's called wave setups. And so here, in addition to the ongoing analysis that we provide throughout the day and on a daily basis, in multiple different timeframes for dozens of different instruments and hundreds of stocks, we'll often take, when we see a very, very clear risk-reward setup, we'll present that as a wave setup with parameters that are modified a little bit to maybe make them a little bit more palatable for a risk-reward model for trading, as opposed to maybe the invalidation level, for example, here was 2150. That's a little bit higher than the technical invalidation for this setup in Elliott Wave, which would have been 2121 for a future setup. So wanted a little bit of a tighter invalidations and things like that. So that would be just under the level that this was back in January 22nd of this year. We saw this nice move up off the low, which even though it was only 3 waves, we saw that as a constructive start to the possible larger ABC up in a third of a diagonal pattern. But the more important thing is we saw a very clear corrective retrace that while it came under an ideal level of support, it presented very, very good risk reward for at least an attempt at a measured move and maybe a little bit more. So we presented this as a wave setup in our Metals and Miners and Agriculture service, showing that it was at good risk reward for a potential long. I identified very, very clear ideal support level at the 22 region, the invalidation level that we mentioned at 2150, an initial resistance level in the 2390s, which is our subwave target for wave 1 of that C wave that's projected. And then a target of 2730, which is just shy of the 100% fib extension, because we were looking for a C wave at the time. So that's how we kind of present our analysis and just a baseline of what we're looking for. One of the other tools that I use, particularly in the metals service, but I like to make ratio charts. And so I'll look at ratios of small caps to tech and things like that. But this is a ratio chart that I've been looking at and posting in my morning update for a while now in the MMA service of the ratio of gold to silver. And we saw a pretty significant top in 2020 to that ratio that hit a pretty extreme level of 125 to 1 of 125 ounces of silver in value relative to one ounce of gold. And we're looking for a larger consolidation for that to pull back. Now, when you're looking at a ratio chart, it doesn't tell you any immediate directional information for either instrument. It is just kind of a relative strength tool that this tells me that the fact that we can apply an Elliott wave pattern to this and look for a larger correction to come down into the possible 50 region of a 50-1 ratio, that silver should be outperforming against gold in anything that the two are going to do. You know, those two precious metals are linked closer together than any of the other precious metals, than platinum and palladium, and certainly more than copper. And they do often look at a glance as though they trade mostly in tandem. But while the ups and down days are usually the same, and a lot of the subwave action is very similar, we do notice some nuanced differences in some levels, and that start to manifest themselves at larger degrees. So you know, maybe that's just in terms of a bigger percentage move. Maybe silver tends to be traded by more aggressive traders using more leverage, and so, you know, the magnitude of its move sometimes gets distorted from a more of a gold baseline. But another thing that, you know, Lynn Alden, who works with us, has shared is that, you know, going back historically, you know, from millennia, their ratio was usually closer to a 20 or 25-1 ratio of silver to gold. And it was only since the advancement of technology, really with the telegraph, that really started to skew and move much more in favor away from silver, that you had other things that were allowed for more divisible currency than needing the silver as a different piece of money. So we're looking for a move down as more of this ABC move down for wave 3 of this larger C wave. And then also looking at, so here's where we start to get into the parabolic support, which are the blue dots, support and resistance, and the iClouds, which I keep it on one of the tabs that I use in Motive Wave, and I just call it PSAR and iCloud. What I really like about this this is on the gold chart, is that we know that there's a lot of ebb and flow to the price action within Elliott Wave, and are looking for kind of, you know, it sort of helps you see the trends. And, you know, sometimes we get bogged down and are looking very, very closely at the smaller degree subwaves, trying to look for that confirmation of the fractal nature, seeing the same 5 up, 3 down structure as the start of another move. And sometimes you kind of forget to zoom out. And so keeping a tab where I usually look at this at larger trends, although sometimes I do zoom in on the same indicators to say, okay, you know, this level in the 2060, 2070 region is a pretty significant resistance region right now. Our PSAR dots are bunching up on the daily, and any move over that level, this was from back in January also, when we posted that setup on silver. So any move over that level, that's going to be an initial resistance region, is going to pivot that and start to print dots on the bottom at wherever price was when it flipped over. And then though that can start to provide support, and so then any consolidation after a possible move that might signal a breakout, then any retracement, you'd want to see it, at least on the daily, hold those dots as support. And so it's a really good, you know, can be something that can just be a good indicator to help with knowing where key resistance is or key support, or just continue to say, you know what, yes, you can be due for a small degree consolidation, but don't get too cute, because the larger trend has already flipped and is doing one thing. So here we were still in a possible bearish retracement trend. And so this chart showed a potential lower low being allowed for a wider flat for this B wave, as opposed to an AB start to wave 1 of the C wave already off of the low back here in 2023. But it was holding support within the iClouds, which I'm not an expert on how the iClouds are calculated. I can share in the chat the settings that I use in Motive Wave. But it's essentially a couple of different moving averages that are shifted over, and then the space in between the crosses, you know, when it crosses over negative, it fills in that entire space from the shift is red. When it crosses over positive, it fills in with green. And I just look for movement either into and holding within a cloud, or just touching the top of, or using those as just yet another support and resistance tool. So we'll see that a little bit more as we head on. We also, when those wave setups get to a resistance level, then we're going to post an initial update. So here we got to that 2390 initial resistance level. Show more detail of the subwave path, how it's filling out. And then I forgot to expand this when I did the screen grab, but when you click read more, you'll see the updated support and invalidation levels, are usually raised. And I tell you what the previous values were and what the new ones are, and set a new resistance level that'll trigger. This one was probably set right around 2511, because that would have been the next fib resistance inside the pattern that we're looking for higher on silver. And so while we filled out that wider flat on the ratio into early January, and we're just starting to turn down a little bit, we knew that that was going to be some important support to, or resistance to watch, to see if silver was going to continue to outperform. That if it started to break that, then it might put us into a situation where we were working on an alt of this B wave and wouldn't have reliable potential for silver to be outperforming gold anymore, at least according to the ratio chart. So moving ahead to March, we had a very, very clear breakout. I went ahead and moved the B wave over on that chart at the time, because this looked better as a wider flat, because it did make that slight lower low, but then got a very, very nice reversal off of the February low. And this is showing right when it was coming up to, this is a 1 week now, right when it's coming up to resistance. And so I kind of use PSAR actually to one of the other things that I wanted to talk about a little bit later, which is VWAP, volume weighted advanced. I don't know what it stands for actually. But as a level to head to for resistance, but also something that can be support. But it's really just another great momentum tool for showing, so here we had a move that was getting close to the initial resistance for that first subwave one inside a bigger move higher. And so we're going to start to look for potential consolidation. But this was going to print just the first weekly. And that's one of the other things, is that particularly at the larger timeframes with the PSAR dots, is that they don't often print just a single dot as an outlier at whatever time frame. Usually you're going to get at least 2 or 3 of them together. So even if this were to start pulling back immediately as the wave 2, after getting the flip here, and even if it weren't going to hold as a wave 2, it would still take at least a couple of weeks of printing the lower dots before it would come down, and even possibly break that if it was going to force a bigger alt. So it can also give you some clues on timing as well. Into the beginning of April, that wave setup on silver futures hit the original target of 2711. So here we're able to make an adjustment also, in addition to setting a new resistance level and updating support and invalidations level significantly higher to lock in gains. Also adding potential higher target as a secondary target for continued extension. It did go and fill out into the April 12th. It went up into the 30-50 region. So it got a nice good extension beyond that. And then we can see into May, we had filled out a lot more of this A wave of the 3rd that we were looking for that outperformance from silver. And so had gotten to a point where we were starting to look for a corrective bounce within that ratio. Minimally could take it up into the low 80 region and easily come up higher into the 84 to 87 zone. Now into just today, we have filled out from that May low for the ratio chart between gold and silver, this corrective bounce. that puts us right into that ideal 618 resistance zone if we're going to use the same fib tools for this ratio chart, as well as a nice measured move here between the A, B, and C. So looking for some initial indicators that we're starting to get a nice setup for outperformance of silver again going forward. And this is just a new update. I decided to include an updated daily PSAR and iCloud chart on silver itself. The more recent pullback has invalidated any potential start to this wave 3 off of the June low. Even though that did look like a nice 5 up, that means it was probably an A, B, and this is working on a C wave, in which case it needs a little fourth and a fifth wave lower, potentially dipping under 28. And that can either be an alt of this wave 2 or an expanded flat for this B wave. But we're still looking for this to hold support in that 28 region and start to show signs of turning back up soon. Also have been using the same tools on the GDX chart. This is looking back at October, end of October of last year. Had a move that came down into support at the 618 for a larger 1-2. So we had 5 waves up and then a wave 2 retrace just under the 618, and had got a nice turn up off of that low into the end of October and then pulling back. That had flipped the 3-day PSAR here in this case. I look at daily, 3-day, and weekly, and then also go up to 2-week and monthly. Those are the larger timeframes that I look at. And we're getting some nice confirmation of a change of trend there. And then this is looking at the same thing into November. Holding that smaller degree wave 2 and starting to turn up after yet another 3-day dot printed. And so we went ahead and at that time posted GDX as a wave setup with a target of 50, looking for just an initial move up to resistance in the 33-33 region as part of 5 waves up for wave 1 of that 3rd wave starting. Also wanted to talk about VWAP. So this is something that I use at much smaller time frames, and particularly in my own trading, also in conjunction with Elliott Wave. So here's a more recent chart on silver. This is a 5-minute chart from the other day. Had a possible setup for a B wave low to be holding in the in the mid 30s, 30-60 region as the low on July 12th, and was looking for this to fill out more of 5 waves up for this sub-micro degree wave 1 inside what would have been a wave 1 target heading up towards the 32 region. And then later that day, when we zoomed into the 1-minute chart, we could in fact see 5 waves up right to that VWAP line that allowed for it to start to consolidate in a small degree. So that's where we're using it as kind of a small degree target or resistance level that we want to see hit to fill out some of those smaller degree subwaves. Here's an example on oil, also from July 12th. Where we're looking for the start of a C wave down in a wider consolidation for oil, and had the potential subwave start inside the microwave 1 of that C wave down. And so here I was using it for, this was on Friday, a week ago or so ago, using that VWAP level as where I was going to set my stop for a short futures trade in oil, to give this room to fill out more of a choppy leading diagonal down for wave 1, but as a good level that, you know, even though we knew that this was supposed to be choppy, any 4th wave should stay under that level, even if that VWAP level continued to dip lower into the close, and we started to bounce as that wave 4 and drop further. So I was heading out to run some errands before the Sabbath. So told my subscribers that that was what I was using as the stop level. I haven't yet figured out if interactive brokers will let you set a trailing stop that is the VWAP level. That's something I have to talk to them about, or maybe um, they already know how to do it. But that would be pretty cool. Here, showing how that the same kind of ebb and flow of the subwaves, the VWAP can be used as a trigger. So we had filled out, after not getting follow through to the downside, we filled out a wider flat for that same B wave into the July 18th high. There's also some shenanigans with the contract roll, and my back adjusted continuous crude chart was not adjusting. But we're looking for a new 5 waves down, and that first break of the VWAP level that could have been used as support, triggered more of a 5 wave move to the downside. Then you got the bounce that went cross back over it, and then the break of that VWAP level again triggered the wave 1 of that microwave 3. Then you get a corrective bounce back over it, and then the break triggers the bigger sell-off in the heart of that third, and then you get the consolidation back over and around the VWAP level for the fourth of that 3. And then again, when it breaks below, then that can be used as resistance and to continue to show the downward momentum for more of that microwave 3. And then again, the same thing with the fourth. And then we filled out that 5th wave today, possibly putting in a pretty significant bottom in crude. And Stockwaves is very, very bullish a number of energy charts. This is a larger degree on oil, just showing the movement off of the 2020 low with the PSARs and the iClouds on a 3-day, showing that we might be flipping the 3-day with the move that we got today. Might have gone enough to flip the top dots back to top dots here, but that might only mean that it just takes a couple of days to chop around, because we're still holding in this general support region for it to start the next leg of that possible move higher as the third. And I think that is pretty much all that I brought to talk to you guys about, and thought I would leave some time to take some questions, and trying to see if I can figure out how to get to the questions box. Or Dave, do you know if there are? Oh, here we go.
Alt H opens the box if you're having trouble finding it.
Yep, I got it. Yes, somebody said Avi focuses on wave 3 of a larger 3 is great when you have that nested setup where you can get the meat of the move. But we also focus a lot on just measured moves, because you're not, especially at this stage of the equity market in particular, and when a lot of with commodities that sometimes move in groupings more of 3-wave moves instead of 5-wave moves. If you sit around waiting all the time for a third of a third, you might miss it. So instead, if you back up a little bit and say, all right, let me just see what the risk reward is for just a measured move. And if it turns into more than that, great. But let me look for, the base hits first. I do find that PSAR helps with confirmation of wave counts, and kind of helps me visualize that ebb and flow of the different degrees of subwaves. But it doesn't really apply the wave counts for you. Try and exit out of the PowerPoint and just pull up a motive wave window. Okay. See if I can share the screen on this. So I didn't prepare anything to talk about on SPY today. I'm mostly focusing on oil and silver and looking at those indicators. But I did pull up. But I can count the S&P is pretty complete at a very, very large degree, but no clear signs of a top yet. So we continue to follow individual names and sectors that allow for higher and things that are showing weakness to split those and have wave setups on both sides of the market that continue to do well. So in the short term, we can see here on the daily that we've triggered the top dots again with that bigger fade down as the C wave, but are holding in the cloud support region for a possible low that fits with the Fibonacci support that we're looking at the smaller degree. Let's add back in our volume weighted added price. That's it. Huh. For some reason, it's not loading. Oh. Well, I was going to look at that on a larger time frame, but let's zoom out a little bit more here. And so here's where we can see as the cloud shifts over, we're going to continue to use that at that larger degree at the weekly as very, very key support. So any break at this point of 73 would be far less bullish on oil. As long as it's holding there, that gives us the weekly. And then in the shorter term, a break back over 82.40 would be the trigger on the daily, but we can zoom in at smaller time frames and say, the initial move over 78.75 now on the 4 hour would flip the PSAR to bottom dots at that time frame, and then should give us a move maybe up into the 80.81 to tag resistance from the iClouds before any consolidation there if we do get that pivot. No other questions? I usually get so many questions that I blasted through the presentation so that I'd leave plenty of time for questions, and now your group doesn't have anything for me. There's a question about the S&P, so we can look at that from a very, very large degree. Viewing the 2009 low as the culmination of this larger ABC flat for a very cycle degree wave 4 inside a super cycle degree wave 3 that started all the way back in the 1930s. And so off of that 2009 low, it is very easy to count a primary 1, 2, 3, 4, 5 complete for all of that cycle degree wave 5 that has hit and exceeded a lot of Fibonacci targets, but has not shown any clear signs of a top yet. There were a couple of opportunities that it had that maybe was starting from an A wave and a B wave, starting an initial C wave down. But once that got over initial resistance into early November, it set up into extension mode. And so at this point, it could even get another 4 or 5, even higher towards the 6,000 level, unless it clearly breaks some more significant support. This teal line is something that I added, is just the cycle that other people talk about, where you go from a capitulation and despondency, depression, apathy, indifference, reluctance, optimism, excitement to exuberance. And then on the downslope, you have denial, fear, panic, and desperation, and then get back ultimately back to capitulation. So just another thing to help my members, kind of visualize the ebb and flow and kind of blend that with the Elliott wave. I kind of put that as a repeating cycle of sentiment, and then tried to match it up with the larger degree. And I've done that at a smaller degree also, just for this fifth wave as well. There was a question about current resistance for silver. On the silver chart, so on the daily, the key resistance is going to be getting back over the 3180s. But if we zoom in a little bit, we're right at some 4-hour resistance. So this bounce could have been just a small degree fourth wave that sets up for another extension lower in more of that alt version of this wave 2. Since it nominally broke the low instead of holding where we wanted to see that hold in the 3020s, or maybe into the 30 region, that failure to hold a nice 618 or 764 retrace made it more probable that this was not going to hold as the bottom for wave 2, and we're going to be looking for that alt. At the 6-hour, we haven't broken over that yet, so we're still right at that resistance. So if we can push a little bit more, then it maybe starts to get a little bit bigger of a bounce than a wave 4, or maybe just it's an A wave and then it gets a B wave and a C wave up for a bigger wave 4 of an ending diagonal for one more drop. But we are kind of right there at the small degree, but dipped a little bit under a cloud that I would have preferred to see hold on the daily for silver. So again, I'm projecting a lot more upside for silver. I do think that gold is going to participate, but because of that ratio chart, and just the price action in silver also, tells me that silver should continue to outperform gold. So I think gold should move along a similar path. The nuance of where it is in this A and B wave is a little bit different, although if silver ends up counting as the wider flat for the B wave, then it'll put it a little bit more on the same page as gold, which looks like so far it's holding this as the same larger B wave because it didn't make this higher high. It held more as a wider flat for the B. But I think overall it's going to be a more muted move. And then on GDX, the more up-to-date one also, we are currently in a top daily dot and only have 2 of them. So while I want a little bit more of a small degree bounce here in the short term, looking for a possible retest of the iCloud support on the daily, to burn off some of those top dots as resistance. But then once we do pivot over them, then really should kind of be off to the races in the mining stocks. And there's a lot of those that are active wave setups that we're very happy with.
Do you follow copper at all?
I do. I don't know if I have a PSAR and iCloud chart drawn up on it, but looking for another 4 or 5 also for this fourth wave. The more bullish alternative is that instead of this being a 3 and a wave 4 in a diagonal for copper off of 2023 lows, it's, even though this got to a 123.6% extension, There's some things like FCX that did not get anywhere close to that, where this looks more like just the A and the B wave inside a bigger version of this wave 3. So instead of getting an ABC up for the 5th wave, those could get a 5-wave move as the C wave closer to the 6 region equivalent. So that's a more bullish alt. That should probably be green instead at this point. I use a lot of color coding. So a lot of what I do, I try and have, here's my base case, and that's what's in white. And then I sometimes will show a few alternative paths within that same structure. Maybe one of them is going to be an impulsive structure, which I might use in green, and one of them might be a diagonal, which I might show in blue, to show color coding for emphasis. Here, I had the alt that this was a B of wave 3, when it was possible that we were holding here as a more shallow version of this wave 4. And I was concerned about this as a more bearish alt at the time. So I was pointing an arrow down. This is a little bit deep to be a 4th wave at this point, but still valid. And so the more immediate bearish alt was that this could push down as this measured move from the high here a couple of weeks ago, earlier in July, for a deeper version of an ABC off the high. But now that's actually the more bullish option, so I'll switch that to green. So that's a quick clue there. And I mentioned that platinum and palladium are just really not as clear and don't match the structure of gold and silver at all. Platinum at least is trying to hold some bullish structure off of the November low, but it's taken it to the limit as the smaller degree A and a B wave inside the start of the 5th wave of that diagonal. And at this point, it's probably only going to get nominally higher as A, B, C up here, and not another B and a C wave from there before it needs to pull back. And we can probably add another key support level at this low. Whereas palladium is a lot more constructive, but it is still very, very early in trying to confirm the start of a cycle degree wave 5 off of the February low, which came close to breaking, but did hold and has come close to breaking again as a deeper retrace here. So not super excited yet about a palladium trade. Need to see a little bit more confirmation here. Anything else, guys? All right. Dave, did you have any other questions I could answer for you?
I do you follow any of the other more I guess more obscure commodities like like wheat or soybeans or
So the Metals Miners and Agriculture Service does cover a lot of those other commodities, the
oh, okay.
softs as well. Wheat has not been behaving. We had a possible start to a third off of the lows back in June, but couldn't hold support there. So it's largely been on my ignore list. Cocoa is getting a nice retrace from some of the extremes that it saw there, and has a potential setup to be short-term bearish, to head down towards the 5,000 region of support. Look at sugar every once in a while. That's coming into support nicely. Sometimes my labels shift a little bit because the contracts roll. Usually it's been getting more severe as interest rates have continued to creep higher, but should really try and extend closer to the 1740 region still, although technically any break under the 1780s is enough for that to be a completed ABC move down. But it still is just a larger A wave in our view, and would only be looking for a corrective bounce, probably back up into the 22 to 24 region, maybe even closer to 25, but not a soaring move to new highs for sugar. But yeah, our focus in the metals, miners, and agriculture service is the metals themselves, and we do regular updates throughout the day for the metals, and sometimes do wave setups there, but also mostly the mining stocks, and then we do cover a lot of the soft commodities and some other. We look at lithium and uranium names every once in a while. We follow a couple of uranium names pretty closely, and are long-term bullish there, but are looking for a lot of them to give us cleaner consolidations before they are good for new wave setups. We also do a lot of analysis on earnings and in stock waves, and so we really make a strong effort to take a look at all of the key names that are reporting earnings either after the market closes that day or before the market opens the next day, and post updated analysis on those names and sometimes actionable setups that could take advantage of the earnings as a catalyst. So here Tesla just reported after hours, it's down -5%. But we were looking for the start of a bigger consolidation here as a B wave in the start of a larger ABC up for a third in a diagonal. Tesla is one of the few things that individual stocks that I've posted a lot about on Twitter. There's a tremendous following on Twitter of Tesla traders. So have been enjoying interacting with a number of those folks with some of our wave counts here. I actually haven't played too much with the PSAR and iCloud. I don't look at it as regularly on Tesla, but this fits nicely with the flip here. So it did give us top dots, and our iCloud on the daily comes in, in the region where we're looking for ideal support for that B wave to hold on Tesla. Ignore some of the spikes. A lot of those will get cleared out. But we resume regular trading tomorrow. It sometimes gets P bars. So it should be a good short-term break. Also, that drop just now did break the 4-hour. So should give us a little bit more follow through. Again, that's a P bar. That's not the actual drop. It's only just now at 238. But should give us a little bit more follow through down into the mid to lower teens for more of this initial A wave. Although possible that it wants to hold here for one more high. But we'll see what it looks like in regular trading hours tomorrow. Anything else I can talk with you guys about today?
What about the cryptos? Do you follow those at all? Bitcoin, Ethereum?
I only track Bitcoin because Ryan runs a service dedicated to crypto and he covers all of the other coins. I have made a ratio chart though of Bitcoin to gold. That's a little bit interesting to look at. And again, a ratio chart isn't telling you any particular direction about either instrument, just is a way of viewing relative strength and possible trends within that. So I was viewing this move up from November 2022, which largely because of the price difference, the ratio chart is going to skew a little bit more towards the price action of Bitcoin than of gold. But this looks to me like a pretty clear ABC structure that made a nominally lower high as a possible B wave. Or my alternative is that this is all of the wave 4, and this is an ABC up for wave 1 of an ending diagonal. But at any rate, would like to see more weakness in the Bitcoin to gold ratio before I decide to go back in with larger exposure to Bitcoin. Doesn't quite jive with Ryan and Lynn's more immediate analysis of Bitcoin. And again, this is not the clearest start to any kind of bearish move, even in the ratio chart. And Bitcoin itself clearly is holding what so far was only an ABC move off of the high. So it could certainly continue to extend more, and this itself doesn't look like the most ABC thing as an A wave and a B wave here, but could just be a fourth wave and a bigger A wave drop for that wave two. I do think it's kind of a buy the dips chart, but that dip can be pretty significant. And maybe this is actually saying more about gold than about Bitcoin. But again, it's a ratio chart, so you really, it's just showing relative strength. Okay. Quick look at the NASDAQ in the shorter term. I don't know why this window is not showing my volume weighted average price. Huh. Let me shift to a different window where I do have that. Okay. So here's the NASDAQ, kind of similar to what we were looking at earlier today in crude, where we have a possible five-wave move down off of the high developing. And it's filling out and playing with that VWAP in much the same way as that C wave down was for crude oil. So we have a possible bounce as a fourth wave into resistance. I think at this point, it probably counts a little bit better moving that third there. And then this is the ABC. But hit a 382 retrace, 38.2% retrace of the third for the possible fourth wave, and we can get a measured move down, measured move as far as the same measure of wave one for the fifth wave is one of the guidelines that we look for. So just dipped under that VWAP level into the close. So that'll reset after the 5 o'clock break. But that could be the nice trigger for this filling out 5 waves down as that fifth wave at the smaller degree. So I would be looking for that. Try and move. So this could have been 5 waves down here for that microwave one. Maybe it needs one more drop, but would be looking for consolidation as that microwave two. To maybe fill out later tonight. And then that initial drop under the VWAP level after you get more of that wave two consolidation would be a nice trigger that you're breaking some support and starting that micro wave three to the downside in that fifth wave drop. So just a nice something that you can try and play with on tonight and tomorrow on your own. Is your VWAP display time fractal sensitive? I think I just have it set so it just goes by the chart session, and it's based on minute bars. So you can adjust it so that it changes based on extended sessions or other things, but I usually just keep it on the chart sessions so that resets, because I think that's probably what most people are using. Oh, and let me go to the settings for the PSAR and iClouds so I can share that. Let's go back to okay, so the PSAR settings are going to use the initial AF as 0.02, the max AF is 0.2, and the step is 0.02. And then in Motive Wave, I go into the lines here, and I just have it do, instead of having a line, I just have it show the points as dots, as small dots. And then on the iClouds, the settings for the iClouds are going to be the Tenkan Sen 9, 26, and 52. For those of you trying to set that up on your own. And then I use all the standard, just the base settings and fills that come with Motive Wave for that. Okay. Let me go back to put this up again. For anybody who needs the QR code for the educational section. And that is pretty much all I have for you, Dave.